Hello guys, welcome to the Nailing FX and Crypto session. My name is Becky, my email address is becky@traddictiv.com, if I just highlight that to you there. And we've also got support@traddictiv.com, so if you have questions you can email us on either one of those email addresses, you'll get hold of us. Just realised there's probably glare in my glasses there, so I'll take those off. So we're looking at Forex and cryptos. We tend to look at swing trading timeframes, but we'll also look at smaller timeframes as well. We'll go through, in fact, I'll tell you in a second, after I've done the disclaimers, it will come up and tell you what the structure of these sessions are. So let's just make sure we put the disclaimers in the top left-hand corner. Those are obviously important for legal reasons to read, but also to understand that these kind of videos are purely demonstrations and are not necessarily indicative of the results that you may receive. So these kind of sessions, what we do is we'll go through the current market environment. We'll look at trades that have closed. We'll look at any trades that are still, as well as inside our closed coaching community. Now, inside our closed coaching community, people are paying a small monthly fee in order to have access to our time, more of our time, in that closed environment. So what happens is about halfway through this session, after we found at least one trade to put on for you guys, after that point, I will cut the stream out to all of the free places to access us, and I will continue in the closed coaching environment for those that are within that environment. So I will start with looking at some closed trades. We'll start with that first. Now, let me just double check. I'm checking the chat boxes here as well. You guys let me know if you're there. Say hello. If you have any questions or any particular currency pairs or timeframes you want to look at, just pop that in the chat box. I'll keep an eye on it. And I will obviously let you guys dictate really what we look at, because these sessions are for you, wherever you are, whatever platform you're looking at. So let's start with, she says, I did have it up. Give me a second. Let's maybe get rid of this and then we can see what I had up. There you go. So let's start with having a look at some trades that we placed last time. I'm then going to come back to this link here, which we can use to place questions. So last time, which is the 25th of August, we placed a couple of trades. One on YouTube, one on the, or two then in the closed coaching community. So let's have a look at what happened to these. These were a US dollar, Canadian dollar. We placed one on the YouTube session on slightly bigger time frames, and the closed coaching community we placed it on smaller time frames. So that's why we have placed YouTube, placed CC, closed coaching, and the time frames associated. So let's have a quick look at what happened. Now, we had this one here, this top one here, was actually the bigger time frame, despite the fact that it was a slightly smaller area. So this black line here, that was our entry, which is 1.2627. Our stop was up here at 1.2642. We had a target here and then a further target down here. These were our targets. So let me draw them out just so we can see exactly what happened there. So that was the entry. That was the stop. She says, I keep losing my mouse, so let me draw that again. So the blue line was the entry, the red line was the stop, and then we had this one was our safety target, and this one was our final target. I know we've got different lines on the chart, that's why I'm drawing over the top of them to hopefully make that a little bit more easy to follow. So in this situation, we had price came in, triggered us here, hit our entry at this point, went away, hit our safety target, and then went against us, hit our stop loss, and that was the end of that trade. So we made 50% of the trade, we lost 50% of the trade. Overall, break-even trade, we didn't win or lose anything. That's why we use our safety target, to help manage our risk a little bit. So that if we're right a little bit, but not a lot, we don't lose anything. Rather than taking a full stop out and losing 100% of what we were risking on the trade. Here, we make 50%, we lose 50%, we break even. That's why we do that. So that happened on the bigger time frame. Now, as you can see, it happened on the smaller time frame as well. So if I just change a couple of these lines, on the smaller time frame, we had our entry was actually slightly lower down. Our stop was in the same place. Weirdly enough, these two UFOs lined up very nicely. We then had a safety target here and a final target here. And again, as we see, price came in, hit us, entered, hit our safety target, then went against us, stopped us out. So overall, two break-even trades there from last sessions on the US dollar, Canadian dollar. So let's get rid of those now. Then we'll look at BTC USD, so Bitcoin versus the US dollar. We placed the trade on that. Oh, that's why I'm connected to TradeStation. Let me just disconnect from TradeStation and go to paper trading so that we can see the same data that we saw last time. And let's do this again. Let's change it and come back, see if that works. There we go. So I'm going to do that here as well. Change it away and then change it back. Here we go. So we had a trade on Bitcoin that was placed. Let me just show you here. So I was using Bitstamp data. So the entry was the black line, the stop was the red line, and then we had two targets. In this particular trade, we actually had, actually this one would have been up here. In this particular trade, we actually had just a full stop out. Price came right against us and went out, and we lost at that point. So it was a full stop out on that trade. Now we're still in this trade back from the 11th of August. This trade, if I just zoom this down a little bit, then we can see where we're at. This trade we got in on the 11th of August, using slightly bigger time frames. We got in here, and we hit our safety target ages ago, and we're still at a profit at this point. Depending on how you manage the trade will depend on whether or not you're still in this. Do you get out because of changes in the climate? Do you get out because of new UFOs? Do you just stay in and let it either hit your stop or your target? Depending on how strict you are and what your rules are around that, depends on whether or not you're still in the trade. If you got out of this trade already, you got out at a profit. If you're still in the trade, then remains to be seen what happens with it. Our target is here. Our final target for that trade was there. So overall, still in a couple of trades, perhaps depending on how you manage it. Closed 3 trades, 2 of them were break even, so didn't win, didn't lose, and 1 of them was a loss. So that's the sort of assessment of the trades that we put on last time. Now what we'll do is we'll come to FX Street and we'll look for potential trades that we should be looking at, and then we'll also be using a scan to go and find new opportunities. So before I do that, I'm just going to come over and check the chat boxes, see if I've got anything there. Doesn't look like it. Again, you guys let me know if there are any particular currency pairs you want me to look at, cryptos that you want me to look at, time frames that you want me to look at, and we'll go through and have a look at them. Now, first things first, I just need to do this because I forgot to do it when we started. There's this link here that you can come to if you have questions. So if you go to tradewithufos.com/Becky, get yourself a free membership if you don't already, and then come down here and post questions in this area. Reason for that is because if you post them there, they're in public, other people can see the questions, and when I answer them, other people see the answers. So we all kind of learn from the same area. You can email me if you want, but hopefully you'll see the benefit in doing your other students a favour, putting the questions there so that other people can learn from those answers. You can come down here and see questions that people have already asked before, and again the relevant answers. So perhaps the question you have has already been answered there, or you're doing somebody else the favour later on. Okay, so let's come to FX Street. What I've done here is I've filtered by the main currencies that we trade and by high impact news. Why? Not because I care what the news is. I don't use the news to help me trade. That's not the point. I'm doing it because I want to know if there are going to be certain currencies that are likely to see more volatility. The increase in volatility, meaning kind of how quickly they move, could also increase risk. It could also increase reward. You could be on the right side of it. If you're on the wrong side of it, of course, it increases your risk. So I want to know, what do we have upcoming that might be better to either avoid or place less trades on, or reduce my risk percentage on those trades. So for example, tomorrow we have the Aussie dollar. This is early hours in the UK. We're looking at British summertime here. That's the time zone we're looking at. So early hours UK. News coming out on the Australian dollar and then the Swiss franc later on in the morning tomorrow. And then on Friday we have news coming out in the morning on the euro and the afternoon in the US dollar. On the following Tuesday we have early hours of the morning, sort of mid early hours of the morning, Australian dollar, and then euro later on in the morning. Of course, we then have things later on the Wednesday, but if we're looking at short-term swing positions, we should be out of trades really by that point. So it gives us an idea perhaps of which currency pairs we might want to keep away from. For example, the Australian dollar has stuff coming out tomorrow and then also on Tuesday next week. So if our trades close by Friday, maybe we only really care about what's coming out over the next couple of days, We've got the Australian dollar, the Swiss franc, the euro, and the US dollar. So what we don't want to do, for example, is trade Aussie versus Swiss, euro versus US dollar, Aussie versus US dollar, euro versus Swiss, right? We can still trade those currencies, but maybe not paired together and maybe not doubling up on the same currency. Okay, so normally we would look at a scan, but I don't actually have the scans loaded today. So what we'll do is we will come back to TradingView and we'll just have a look at different currency pairs. In fact, what I might do first of all is have a look at cryptos, because we don't spend a lot of time on cryptos, and of course that's what a lot of people want to know about. So unless you guys give me something else in the chat box to look at, we'll take a look at some cryptos. I'm going to go to slightly bigger time frames just to mean that we are slightly safer here. We've already had a couple of situations with Bitcoin recently, so let's go to a different crypto. Let's look at Ethereum. Ethereum's sort of shot up relatively in the last couple of days, so perhaps a good opportunity here. So let's see. So let's just come back to current price on Ethereum. Okay, it looks like we do have an opportunity, and let me tell you why. It may slightly end up not one, but let me explain why this may be an opportunity. By the way, the data I'm using here is coming from Bitstamp, not for any reason, just because it was one of the on the top of the list to get the data from. Of course, if you have your money with an exchange like maybe Coinbase or Bitfinex or HitBTC or whatever, there's loads of them, right? Then you want to make sure, if you can, if you're using TradingView, to look at the data that's coming from the broker or exchange that you are using, because the numbers are going to be slightly different. And if you're going to be placing trades in the account where you have the money, then you want to be making sure that you're using data that's relevant to that account, if that makes sense. So this happens to be Bitstamp, but again, you want to make sure, let's say if I put in Ethereum US dollar, I go to crypto, you can see there are loads of different places that I can get this data from. So let's say you have a Coinbase account, click on the Coinbase data. The numbers are going to be, like I said, just slightly different. So you want to make sure you're looking at the same one. I'm just going to use Bitstamp because it was the top of the list. Okay. So with Ethereum, we have a thick blue dot on our auto climate. Now, why is that important? It's important because first things first, when we trade, we want to know, do I buy, sell, or do nothing? AutoClimate here, which by the way is a free app on most platforms, you can use it on. AutoClimate here scans through market data and comes back and basically gives us the answer to that question. If it's a thick blue dot like this one, that tells us probability is upwards, meaning maybe buy. If it's a thick red dot, that tells us probability is downwards, meaning maybe sell. And then of course we have thin dots of either colour. Slightly harder to see, but I guess that's for a reason. Thin dots of either colour that tell us do nothing. Change time frame, change market. So on this time frame, on this market, we have a thick blue dot, probability upwards. If we have probability upwards, we should probably look to buy. So let's have a look at that. Now, I said that we had an opportunity, but I've just seen this red UFO here that's in our way. Let me just explain what I'm going to explain here. We were going to, this is what I was going to do, is use this UFO. Do that the other way around. I was going to use this UFO as my entry UFO. But if we see here, price is already within this UFO, which is in a bunch of sell orders, basically, right now. So what that means is we have buying pressure underneath us, and we have something lining up here for potentially a good buying opportunity. But with that, we have selling pressure coming in right on top of us. If this sell UFO was, if this sell UFO was up here, you know, a little bit of a way away, like here, then cool. We might say, great, we've got room to take profit on this one. But because we have sell orders right on top of us, in fact, we are within them. The sell orders started at 3340.99 and we're at 3531.26. So we are within this stack of sell orders, which are right on top of us. So if we're going to be buying, when yes, we have probability to the upside, and yes, we have buy orders, but we also have a big stack of sell orders, reduces our probability that we're right, also takes away the room to be right and to actually take a decent profit out of this trade. So I will decide not to take that trade because we're not having everything quite line up the way we want it to. So let's have a look at a different crypto. Again, you guys let me know if there's any ones that you particularly look at. Let's look at Litecoin. So just answer this one very quickly. Again, this is why AutoClimate is really helpful. Again, free app. It's a thin dot. So it tells us not enough probability either way. Don't bother. What we could do is perhaps change timeframes or change market. Let's perhaps change time frame and see if we have a different situation on a smaller time frame. So if I look at a 4-hour chart on the left hand side, I might then look at a 21 on the right hand side, and we may just find ourselves in a situation where it lines up, but probably not. We could change to a slightly smaller time frame. By the way, I personally wouldn't be trading cryptos on small time frames. They're quite volatile, they jump around a lot. I would rather not be exposed to that amount of movement on small time frames. So no opportunity here either based on where the UFOs are. When I find one, I'll explain it. For those of you that might be watching and this is the first time you've joined us, or one of the first times you've joined us and you don't know what's going on or what I'm looking at, don't worry, when I find an opportunity, I will explain it to you. For those that are with me, you'll understand why we may or may not be taking some of these trades. Okay, so this one doesn't line up because of the EMA versus the UFOs. Let's go back to Ethereum on this time frame. Similar situation, we're also in weekly sell orders, so we'll keep away from that one on Ethereum. We could go to Bitcoin, and I'm going to use different data so it's not confusing us with what we already have over there. Okay, so let's see. Right, looks like we don't have buy orders for a while on Bitcoin there. Let's have a look at a smaller time frame. Actually have a confirmed downwards climate on Bitcoin here on a daily chart. So let's see if we can find some sell orders to help us out with that. 47, 8. Nope, not lining up either. Let's look at a slightly smaller time frame, 4 hours and 21. That for me would be the lowest that I would choose to go. Also not lining up. The reason for that, let me just stop and explain this as to why I wouldn't go too low on cryptos. If you look at the US dollar, for example, talking Forex, the US dollar moves up or down in a year of about 5-6%. Bitcoin moves up or down in a year of about 100%. So it moves a lot, it moves quickly, it moves by jumps in price and jumps as a percentage of its value. The smaller the time frame, the smaller your area of whether or not you're right or wrong. Because if I'm on a small time frame, then probably I have a little UFO. That's, in the case of Bitcoin, let's say $500 worth of difference. If I'm on a bigger time frame, perhaps my zone is a little bit bigger, my area is a little bit bigger. So I have more room for it to take into account the fact that it's volatile and that it's moving a lot. So for me, I'd rather not go down any further than 4 hours on my common time frame and 21 minutes on my edge time frame, because it's just more likely, even if you're right, the volatility might just stop you out and then you have a bit of an issue. I also have slightly different rules with cryptos when it comes to where I place my stops, because I want to give it a little bit more wiggle room. So I'll tend to either find a pivot point or find another UFO in order to, again, give it a little bit more wiggle room, because of the volatility that we get in cryptos that we don't really get as much in other currencies. So I've looked at 3 major cryptos here. Can't find an opportunity lining up. So let's go back to our standard Euro US dollar. Let's have a look at that. See if we have something here. This was a trade from a while back. I'm just going to delete that. There we go. So do we have a trade here? Yes, we do. Brilliant. Let's put this trade on. Okay, so we have a thick blue dot. This is the euro dollar. We've got 4 hours on the left hand side, 21 minute on the right hand side. So this is a short-term swing trade or a long-term day trade, kind of in between those. We would expect, if we were to get into this trade, for it to last perhaps, I don't know, a couple of days at most, a few hours, more than likely. So it means that our trades are not going to be on for weeks and weeks, like you might have if you're sort of traditionally swing trading or long-term swing trading, but you're not going to be in and out in minutes in the way that you would be if you were properly day trading. So it's somewhere in between there. So with the euro, we have a thick blue dot on the left hand side. That answers question 1 for us. Do we buy, sell, do nothing? Thick blue dot tells us probability up, we should buy. We then want to know, question number 2, if I buy, where? Where am I going to buy? Where's the best place to buy? Just whatever the price is right now? Or are there better places to buy where I can increase my probability, decrease my risk, and increase my profit potential? That's where these UFOs come in. These AutoUFOs. These UFOs show us prices where we have buy orders. The first price that we see buyers and the last price that we see buyers within these ranges. So if we want to buy where there's lots of other buyers, because it's much more likely to push price upwards. The only way anything in the world can go up in value or up in price is if you have more buyers than sellers. So by knowing where the buyers are gives us an edge to say, okay, if there's lots of buyers there, they're more likely to beat the sellers and push price up. So it increases our probability. It also means that we get in as price retraces. So we get in at a lower price, so our risk decreases. We also have a place where we're objectively wrong, tells us exactly where to be putting our stops. And it also gives us more room to the upside as well. So that's why we answer that second question, if I buy where, and we use the AutoUFOs to help us with that. Now you might think, okay, hold on. You've looked at loads of charts that have UFOs on. Why is this the only one where you actually have a trade to be placing? And it's because of this third element here that we add in, which is, there we go, our EMA value. Now why is the EMA value important? It's important because lots of people buy at the EMA value or sell at the EMA value, depending on where price is relative to it. If price, which is here, is above the EMA, which is there, as price moves down, if it hits the EMA, people buy it. If price was below the EMA, say it was down here, and then it moved up and hit the EMA, people would sell at it. So at the moment, price is above the EMA, meaning if price were to come down and hit it, we'd have buyers. So what we'd have then is buyers at this price, or roughly around that price. Remember, it's a moving average. So we'd have buyers roughly around that price, around about the same time that we have these UFOs. So if I just draw on the chart here, you'll see what I mean. So if I do that, and I'm going to clump these UFOs together, because I'll explain that in a minute, because they're close enough together, but I'll explain exactly the numbers in a minute. So if I put these lines roughly around it, I'll be specific in a second. If this is going to be my entry, this top black line, and this is going to be my stop, this bottom red line, what I want ideally is that by the time price gets here, if it gets here, I want my EMA value, which is right there at the moment, to be inside this UFO. Now what's great about this is it's an EMA, which stands for exponential moving average. Key word here is moving. It moves. It's taking an average of the last 9, in this case 9 candles, and giving you the average price, which means as price moves, so too does the moving average, because it's giving you an average of price. So it's tracking price really. So as price moves down, and currently the EMA value is about here, as price moves down, so too will the EMA. And therefore we then have our UFOs and EMA combined together at the same price, which means we have buyers here and buyers here in the context of a situation where we have probability upwards. So basically we have buyers, buyers and buyers. That is a good combination for us to be buying. It gives us better probability. So taking these two UFOs close together, because they overlap a little bit, and the reason they overlap is because we give each individual UFO a bit of wiggle room. So this top UFO, the numbers are 1.18174. I'm going to round it up to the closest pip, which is 1818, and then add a couple of pips, which is 20. Now, if I was to take just this top UFO, then the next number would be 1.1813. So that's where that's drawn in. Now, I then want to round it down by 5 pips, give it a little bit of wiggle room. If I round it down by 5 pips to 1808, see how that means that my stop loss, I need to inverse the colours here, but my stop loss would be within another UFO. I don't want a stop loss within another UFO. If you're buying, then your stop loss is a sell. I don't want to sell in the middle of buy orders because the buy orders are likely to push price up. I want to be with those buyers. So I want my short, or my sell, to be outside of buy orders, somewhere down here, where it's not overlapping with other buyers, because at that point I'm definitely wrong. If price has dropped through 2 stacks of buyers, dropped through the EMA and dropped through the climate, I'm definitely wrong. I'll get out of that trade. So that's why we use it in that way. So I'm actually going to just change the colors over. So we're going to take this bottom number, which is 18.044, round that down to 18.04, take off 5 pips, which is 17.99. And that's going to be our entry and stop. Now, we then need to figure out where our target will be. Now, it doesn't look like, oh wow, we've got a lot of room here on the euros. Let's just take a quick look at this. So our final target, where we will ultimately take profit if price goes up there, is all the way up here at 1.2110. Now, likelihood is something's going to change between now and then, and we won't reach all the way there. The further away the target, the less likely you are to hit it. So in this situation, yep, further away the target, less likely we are to hit it. We'll still put the target in, and then we'll probably have some trade management techniques that we'll use as the trade is open. And I'll talk through those quickly before we then cut off the live stream. So first things first, let us put in our safety target. So entry is 1.1820, stop loss is 1.1799. I'm going to risk $50. I always risk $50 on each half of the trade just because it makes $100. Nice round, easy number. That's easy for me to split in half. You guys will risk whatever you are comfortable to risk based on your account size and your risk tolerance. Now, our safety target is always 1 to 1 away. So all I've done here, I put in the entry, I put in the stop loss. TradingView has worked out for me that's a 21 pip difference, which means my target needs to be 21 pips away. It's really, really easy, 1 to 1. I'm going to draw it on the chart so it's easy for us to keep track of. And 1.1841, lovely. That's our safety target. So I'm just going to check that the entry and stop and target all line up, and I'm risking $50. And then we'll put that trade in. There we go. Now our final target, as we said, was going to be up here. So let's draw that on, which is 1.211, 1.2110. There you go, that's our final target. So same thing, same entry, which is 1.1820, stop loss at 1.1799, and profit target, in this case, we're just going to type it in, which is 1.2110. See, that's a 13 to 1. Less likely to hit a 13 to 1 than you are likely to hit a 1 to 1, right? So let's place that trade, that's now in, and we'll put a little note for ourselves. Placed 1st of September. YouTube session, 4 hours, 21 minutes. Great. So, I know I said YouTube session, you might be watching it elsewhere, but I mean not in the closed coaching one. So, with this particular trade, like we said, the target, if I squish this down, look how far away this target is going to be on this time frame. Look how far we have to be right for, how long we have to be right for in order to take that profit target. Don't get me wrong, if it hits it, great, we're going to be very happy about that. But likelihood is something's going to change before then, because it's going to take quite a while for that to happen. So what will happen is you've got different ways that you can manage this trade. And I go through different ways, not because I want to confuse you, not because I want to be wishy-washy on it, but because we're all different and we are all going to have different time availability that we can check in on these things. We're also going to have different risk tolerance, how much we want to be exposed or not to risk. So some people will easily go, fine, great, that's my target, put it in, walk away. I either win or I lose, don't care, right? That's a very risk tolerant, shall we say, way of doing that. Because you're not taking into account changes that could happen along the way that may decrease your probability. You may be somebody that says, I'm going to check in on this every minute of every day to check the tiniest movements, the tiniest things that could go against me so I can get out at that point. That would be very risk averse. Somewhere in between is normally a good idea. So there are different ways you can do this. You can, remember we got into the trade because we had a thick blue dot, so probability upwards. So let's say price comes down, we're in the trade, comes up, doesn't really do anything, and over a couple of days we end up with a thin, very thin, let's use a different colour, that pink dot there, I'm going to say is a thin dot. We now have a thin dot. That tells us we no longer have probability upwards. If we no longer have probability upwards, why do we want to be in a long position? Why do we want to be in a buy position, hoping price goes up, if we no longer have probability upwards? So you'd check in every 4 hours, because that's the bigger time frame. Check in every 4 hours. Do we have probability up still? If we don't have probability up anymore, you simply get out of the trade. So if you're in it and price is here, then you just close the trade at that point and you make a tiny little profit. If you're in it and price is somewhere between your entry and stop, well, you close it out here and you make a little bit of a loss. So you can use the climate to tell you when to close out early. So you can use that. So one way of doing it is the climate. Another way of doing it is to trail your stop loss behind UFOs. So let's say price comes in, goes off, hits our safety target, happy days. We're now in a break-even trade. And let's say a new UFO forms here. Now a new UFO shows us that there are buy orders. So we take our stop loss from here and we put it here behind a new set of buy orders. So price has got to go through buy orders before it stops us out. Let's say it continues up and a new UFO is formed here. And we take our stop loss from here and we put it here. And we just locking in profit as we go. That way, let's say price then turns at this point and comes down, we get stopped out here at a profit. So we hit our safety target and then we hit a trailing stop loss at a profit. Great, we made money doing that. So you can get out because the climate changes. You can get out because you've trailed your stop. So you're not manually going in and saying, right, I'm going to get out right now because I've checked on it and the climate's changed. So I'm going to manually close the position now. You can just trail your stop behind new UFOs. You would, manually move them, but then leave them knowing that if price was to fall or were to fall, you would get stopped out at that point. Those are two ways of doing it. There are other ways of doing it as well. You could implement a time stop, which is basically how long you're in that trade for by the time you get to the end of your 4-hour candle. You could say you're somebody that wants to be in and out of trades in a day. So if it doesn't hit within the day and close within the day, you close it out. There are different rules and it's going to depend around you as a trader, your time, your risk aversion, your risk tolerance, things like that. But hopefully I've given you some ideas as to what you could use. The most important thing is that you either pick one and do that one every time. If you're going to manage your trades and you have a way to manage them, let's say auto climate is the way you manage your trades, well then always use auto climate. Don't sometimes use auto climate or sometimes use other things based on however you feel, because then you're not being consistent. If you're not being consistent in your action, your result is likely to be inconsistent as well. Or if you are going to use different rules at different times, have a very strict set of rules that tell you why you do one or the other. So let's say, for example, you could say, I'm going to trail my stop behind UFOs, but if the auto climate changes, I'll get out at that point first. Or whatever. But have a really strict set of rules that says, in this environment, this is what I do. In this environment, this is what I do. And understand why. Otherwise, pick one way of doing it and stick with that. As you get used to that, you can then perhaps diversify into different ways of managing your trade. So hopefully that makes sense. I know I've kind of spent a long time watching this particular set of currency pairs that we're looking at here, but hopefully that makes sense. I'm just checking the chat boxes. Doesn't look like there are any chats or any questions or anything. So what I'll do is I will stop the stream to the free places. So for those of you guys that are watching on YouTube and Facebook and stuff, I'm going to stop the stream now. We've had one trade that we placed today. It was the Euro US dollar, 4 hour for the bigger time frame, 21 minute for the smaller time frame. Entry at 1.1820, stop loss at 1.1799. A target at 1.1841, another target at 1.2110 with trade management techniques that we can use in between. When we come back next week and have a look at the charts, we'll see what happened, how we would have managed this trade, what would have happened depending on your management techniques, and how it went. Did we win? Did we lose? Did we cancel the trade? Did we get stopped out somewhere in between? How did it go? We'll look at that next time. Any questions, go to tradewithufos.com/Becky. So you can come to that and you can get yourself a free Trade with UFOs membership if you don't already. Come down, ask a question here so other people can see it. Otherwise, you can email me, becky@traddictiv.com. For those of you in the closed coaching community, I am going to have to cut the stream to the other places now. So it's going to take me a second just to do that. So give me a sec, wait for me, and then we'll continue on in that session. Everybody else, I will see you guys next time. Have a great rest of your trading week and I'll see you soon. Bye-bye.